It's Donna Briggs, and today is Finance Friday. Yay! I want to say congratulations to my Valentine's Day, Make Every Day a Great Day winners, Jonathan Goslin, Donna Carbone, and Derek Lipsky. I said I was going to weigh 4 of them and have 1 more left. I'm giving that away tomorrow. So check your inboxes. It may be you. You never know. So I want to get right into Finance Friday, but I want to say congratulations to my winners. And remember, you have to bless someone and make their day a great day. I made your day a great day. You have to make someone else's day a great day. It's all about, paying it forward. And I'm telling you, it'll make you feel so much better when you do it, and your life will change. Once you start doing that, you get in a habit of doing it, and your whole life will change. Anyway, into the terms. Capital gains tax, credit reports, and credit score. So, I always tell people to invest. Now, I don't know if you know this or not, but I didn't mention this part. Capital gains tax. What is capital gains tax? It's when you invest, say you take $1,000 or $10,000 or $20,000 and invest in something. The stock jumps up, your cryptocurrency jumps up. I'm gonna get into that next Finance Friday, cryptocurrency. That jumps up, and you say, you know what? Hey, I have an extra 100,000. I have extra 50,000. You have to pay taxes off the gains of the money that you put in. The taxes don't come from what you put in, is the money you made from what you put in. So if you make 100,000 or you make 50,000, they're gonna tax you when you pull it out. If it's in there, they're not gonna tax you on it because you didn't use it. Capital gains tax. Very important. I don't want you guys making all this money. You pull out 100,000 or 200,000 or whatever you're pulling out, and you're like, oh man, I gotta pay taxes on $100,000. Yes, capital gains tax. Now talk to your accountant, because maybe you have some write-offs or something like that. If you have some write-offs, you won't have to pay as much capital gains tax. I'm not a certified CPA. So go to your tax accountant if you can and get tax advice. I'm just telling you, that's his term for today, capital gains tax. Second term, credit reports, Equifax, TransUnion, Experian. The reason why I'm getting into that is because we are in a time where they're looking at your credit score, they're looking at your social media profiles, and they're checking to see if you're even trying to fix your credit. If you have bad credit. Now, anything under 700 score these days is considered bad credit. I know you're like, under 700? Yes. These days, anything under 700 credit score is considered bad credit. So you're saying to yourself, well, what am I supposed to do? My score is it's 650 or it's 600. Go to lexingtonlaw.com. They're not paying me. They're not endorsed by me. I'm not getting any money from that. I use them myself. My credit score dropped to like 680 or something like that. Because Wells Fargo said I was late like 2 years ago, and it was on my credit report, which was not true. So they went to Wells Fargo, and then they made sure that they took that off my credit report. Yeah, so I'm back to 800. Anyway, so anything under 700 these days is considered not good credit. Go to lexingtonlaw.com. I use them. That's the only reason why I'm saying go to them. It's a legitimate credit repair company. It's not free, so you're going to have to pay them. It's worth it because they will fix your credit. They will take stuff off. They will keep writing these people. Like, you're not going to have time or think about writing all these people or whatever. Whatever's on your credit report, they go through your whole credit report, and they will take off any negative thing. They write letters for you, all of that stuff. That's a very, 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 very good place. I've used it before. And I actually keep them on retainer. So I keep paying them every month to make sure my credit stays at the 800 that it is, because little things like slip into your credit report if you don't check it. That's why I always tell people. Oh, and another misconception people have. If you pull your credit, it drops your credit score. If you pull it once a year, it's not going to drop your credit score. If you keep pulling it, of course, it's going to be like, why is she keep pulling her credit? Or why is he keep pulling his credit? Because if you keep pulling your credit, the credit reporting agencies think, oh, you're trying to buy something, or oh, you're trying to make more debt. credit card interest rates. That's another term for the day. Now check your credit card interest rates. We talked about a home equity line of credit last video. And I was saying pay off your credit cards with that, if you can get one. Because the interest rate on these credit cards are like 18%. So if you got a $2,000 credit card and you're paying 18% interest, you're never going to pay off that credit card. When I say never, you're never going to pay it off. You're just paying back the interest. And that's what they want. I mean, of course, it's a bank. It's like, we don't want you to pay it off anyway. And we're going to talk about that, prepayment penalties. But that's if you buy a house or something like that. But that's a whole nother term. So I'll get into that the next Finance Friday too, prepayment penalties. But anyway, you don't have that on a credit card. That's something totally different. But those are the terms. Capital gains tax, credit reports, and credit interest rates. 18%, 12%. Some credit cards, if you like have really bad credit, it's 22, 25% interest rate. That means you will never, ever pay these people back. And that's what they want. Remember, banks are in the business to what? Make money. That's what they do. I'm going to make money. Hey, let me open up a bank, because you charge these people outrageous amount of credit and then they can ever pay it back. So if you can, try to get a credit card. You have to pay it back in 30 days. That's why I love American Express. I mean, I can stagger the payments, but I never do that. If I can't pay the cash off at the end of the month, I am not buying it. I'm not going to do it because I don't want to pay the high interest rates. And that is a good rule for you guys to follow. If you can't actually pay cash for it, but then you're saying to yourself, some people are saying, why don't I just pay the cash? Why do I need a credit card? You need to establish a credit history. You have to have a credit history. And hopefully it's over 700 so you can do things. Because a lot of places, if you want to buy a car, they're not going to let you come in there with $100,000 in cash. And if you do, the FBI will be after you, the CIA, the Fed, whoever will be after you, because they're like, the car company is going to call someone and say, this person came in with a bunch of cash. You know, you don't want to go through that. Just have great credit. So then you go in these car dealerships, whatever car you want, you can get it. You can drive off the lot in it. But make sure you can pay for it every month. That's a whole nother thing. We're going to talk about that too, another Finance Friday. So those are the terms for Finance Friday. Capital gains tax. If you make a profit, like I said, on some shares, you pull it out. You make $20,000, $30,000. You're going to have to pay capital gains tax. If you have a good CPA, which is an accountant, they will make sure that you don't have to pay all those taxes because they have some kind of formula. I don't have it. I'm not a CPA. Credit reports, Equifax, TransUnion, Experian. Try to have a score over 700 plus. LexingtonLaw.com, great website. I used it. They raised my credit score. And credit card interest rates. Try not to get a high credit card interest rate. But you're going to get a high credit card interest rate when you have bad credit. If your credit score is over 700 plus, you will get better interest rates. Because they're like, oh my God, so much competition. Everybody's trying to give me these cards. And then you'll get cards in the mail. Okay? Don't fall for it. They're going to if you get your credit score over 700, like me, I'm constantly getting cards in the mail. I don't want the cards. Now, I might open one up and I might buy, I don't know, some stuff from the store. I might go and buy some Windex or something and pay it off at the end of the month. You know, I might do that. But don't get trapped in those credit cards and don't live off your credit cards. A lot of people are doing that too. So that's today's Finance Friday. I love you guys. Make every day a great day. And congratulations to my Make Every Day a Great Day Valentine's Day winners. We have one more left. And yes, I'm still going to wear PS5. I love you guys, and I'll see you soon. And remember, make every day a great day and follow me on all social media platforms. Bye.